Today I'm going to show you how you can use the stock screener provided in the guidelines to this stock track simulation in order to find stocks that you would like to purchase. When you want to purchase something in stock track, we go to trading, and in this case stocks, because I'm going to buy stocks. Now what we have to do is we have to know the company's symbol. So we cannot just write that I would like to buy Google, but I have to write the symbol, which is Goog, if I would like to buy shares in Google. And if, for example, I don't know what the symbol of the company is, or even more, maybe I don't even know what kind of companies there are in the North American market, then I need some kind of help to find which companies I should purchase or short sell if that's what I'm going to do. So today I'm going to use the Yahoo stock screener in order to do that. We start by going to the course webpage, then to course materials, the portfolio simulation instructions, and the portfolio guidelines. Now, if we scroll down to the end, then we find different investment screeners here. So today I'm going to focus on the Yahoo stock screener, which is a screener to find stocks. Okay, so you just follow this link here, and you get to this page. And the one I'm going to use is the basic screener, which is their HTML screener. So we just click on this link, and we get to the following page. Okay, so here we have screener settings. So when you use a screener, they're going to have a very large base of companies available, and then to narrow your search you have to give the screener some criteria to work with. So for example, I could decide that I would like to purchase shares in a specific industry. Maybe I'm interested in the oil industry for some reason. Then I would go here in the industry section to the oil and gas, and I could choose the industry I would like to purchase shares in, and then they will show me all the companies in that industry that's in this screener. I could also decide that I would like some kind of index membership. For example, I could say that I would like them to be part of the Standard & Poor's 500, or maybe the Dow Jones Industrials or something else. And today I'm going to look at the Dow Jones Industrial for no specific reason, actually, but just to give you an example. You could also choose some share data. So for example, you can look at the market capitalization, which is the total value of all the outstanding shares of the company. And then if I want a company that has quite a high market value, then I could choose the market capitalization to be at least $10 billion or at least $25 billion or whatever number I would like. Or I can also say that maybe I'm only interested in companies with a quite small value on the market, and then I can choose a max value that's fairly low. Maybe I would be interested in purchasing stocks with a high or low beta. As you might remember, the beta measures the market risk that the company is exposed to, or at least the share is exposed to. And then maybe I would like a high beta to have a high risk and hope that the market is doing well, which should mean that my company is performing extra well. Or maybe I would like a low beta in order to not have such a high risk in case the market would go down. I can also look at some sales and profitability values, but the ones I'm going to focus on now is the valuation ratios, because I don't really know that much about companies in the US. So what I could do is I could use some of these: the price-earnings ratio, the price-to-book ratio, the price-to-sales ratio, or the PEG ratio. The PEG ratio is that you take the price by earnings and then you divide it by the expected growth. So it's somewhat an indication of how much do you pay for today's earnings compared to what the expected growth is. And I could also use analyst estimates. Here you have the estimate for the 1-year growth in the earnings per share, and here you have the 5-year growth in earnings per share. And you could also actually use the analyst recommendations. Some analysts give the recommendation that you should buy a share, some give the recommendation that you should sell it, and some give the recommendation that you should hold it. And here you have the average analyst recommendation, and you can choose to only show companies which has a buy rating on average from the analyst. And in my case, I'm going to have at least an average of a hold rating or better. So it could be up to 1, but at least they're not suggesting that I should sell it. But say that, for example, I trust analyst and I would like to short sell, then I would probably want an analyst recommendation that says sell. Or maybe I don't believe in analysts and believe that they in general are wrong, so I would like to do the opposite of what they tell me. Then I could also, for example, use the analyst recommendation sell as a purchase decision. But the ones I'm going to use today is I'm going to have the Dow Jones Industrials, I'm I'm going to have the average analyst recommendation of 3 or better, and I'm going to use a price earnings ratio between 5 and 15, a price to book ratio of at maximum 5, and a PEG ratio that I don't really know yet. The reason I choose between the minimum of 0 and the maximum of 20 is that when I do this screen or the search, then I'm going to display info for all the actively screened data. So I'm going to see from the PE ratio, I'm going to see the price by book ratio, and I'm going to see the PEG ratio as well as the analyst recommendation today. Okay, so I click on find stocks now, and then I see in this case only 12 different companies. So here are all the companies that fit my criteria. They have a PE ratio between 5 to 15, they have a price to book ratio between 0 to 5, and they have some PEG ratio, and the average recommendation from analysts is at least 3 or better. And they also are parts of the Dow Industrials Index membership because I said so. Okay, when you look at the different stocks here, maybe I would like to know what is this Caterpillar Incorporated common stock? I don't really know that company. Alright, then I could click on profile here. And I would see some business summary, and you can also click on key statistics. If I go back now, there are quite a lot of other information. Maybe I would like to see the financials of Intel Corporation. Then I go to Intel Corporation and I click on financials. And then I get some information that I could use as a decision to purchase the share. I'm not going to go into that much detail now though. So I'm going to say, okay, I wanted the share to be part of the Dow Industrial Index. I wanted a PE ratio between 5 and 15. I wanted a price to book ratio of at maximum 5. And I wanted an average recommendation by analysts of at least 3. But I'm going to base my decision here on the PEG ratio. Okay, so I wanted the other criteria are criteria that I would like to be satisfied. I don't really care if I have the lowest PE ratio or the highest in this interval, but I would at least have it between 5 and 15. But I'm going to base my decision on the PEG ratio in this case. I'm not saying that you have to do that, it's just for, in this example, I'm using the PEG ratio. Okay, and I'm also going to buy the 2 top shares based on this ratio. So I'm going to buy Intel Corporation as well as the Travelers Companies Incorporation. Okay, so we now go to the StockTrack website again. We have to take the symbol of the company. So for Intel Corporation, we have the symbol INTC. So we copy that, go to StockTrack, and enter the symbol here. Then we see the information about the stock. The last price was $22.53, and I'm going to purchase 2,000 of this share today. Okay, you click on preview order, and you see, okay, this is going to cost me $45,500. Alright, that seems fine. Place the order, and it says, okay, the market is now closed, so I'm going to have this order processed when the market is open. But I'm not done yet, because I wanted to buy the second company as well, which was in this case the Travelers Companies Incorporated. The symbol is TRV. I go to StockTrack, enter the symbol, we look at the company and see that the price here is 80, so it's fairly much higher, and I'm going to purchase 400 of this share. Not 400. Okay, we preview the order and say, okay, this is going to cost me $32,000. That sounds okay. So I place the order. Alright, now when the market opens, I should get the Traveler Companies for 400 shares, and I should get the Intel Corporation 2,000 shares. Now, I'm going to do one more thing before I'm finished, and that is to write down the information I used to make this decision. Okay, so I had some criteria that had to be satisfied. I wanted the PE ratio to be between 5 and 15. I wanted the price to book ratio to be less than 5, and I wanted the average recommendation from analysts to be at least 3. Alright, so this is what I call criteria to be satisfied. I said that the PE ratio had to be between 5 and 15, the price to book ratio should be less than 5, and the average analyst recommendation should be at minimum 3 or better. But that was not what I based my decision on. I based my purchase decision based on the lowest PEG ratio, and I decided to buy 2 companies. So the companies purchased were Intel Corporation and the travel companies. And here are the symbols as well. Now, if I would like to go back and look at how the information looked like, I took the link from here. I just took this page and copied it. And this is so later on when you're going to evaluate your decisions, you could go back and use this information to see, okay, we based it on the P/E ratio. Did that turn out to be a good idea or was it a bad idea? It's always hard to see if it went good or bad because of this decision, of course, but unless you write down why you did choose the Intel and the traveling companies, then you're probably not going to remember it in 3 weeks from now, and it's quite hard to say if it was a good decision or not when you don't really know why you did it. Okay, so that's how you use the stock screener and how you purchase on StockTrack. Now I'm just going to show you that if you would like to read about this valuation that I used, then on page 788 you can find the price to book ratio and the price to sales ratio. There's also a little bit of information about price to cash flow, but the Yahoo screener didn't have that one. So, and you can read quite a lot about the P/E ratio. They first mention it on page 70 to 71, and then you have it on chapter 22.4. The PEG ratio is only briefly mentioned, but you can still find it on page 783. Alright, so that's it for today. I hope this helps you, and see you next time.